Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Hey, Paul, welcome back.
How you doing?
I'm good, man. Not a lot has changed since the last time we talked, about 20 minutes ago. So we are trying to knock a few of these out right now because we've got some, I'm going to be out of the country and kind of out of touch for a while here soon. So
Yeah, and I'm going to be participating in that a little bit next Sunday.
like a week from now, you'll be here.
Yeah,
Yeah, a week from the time of this recording. Yeah,
Right.
You'll be here. We'll be hanging out. That'll be good. Maybe have a couple stogies, a couple drinks. So
ooh, yeah,
yeah,
good idea.
Bring some good stogies if you have some.
I got to go check my humidor. I actually got a client that's runs a cigar shop. So
cool.
I need to actually reach out to him and see if maybe I can get out there.
You know, a cigar use isn't that big a deal if you just use a couple cigars. Like I smoke maybe a couple cigars a year.
Oh yeah,
So,
that's not.
I mean,
Yeah, but
as
when
far
you
as
smoke
life
like
insurance goes,
when
Yeah.
you smoke 4 a week, you're gonna get smokers rates.
you're definitely going to get smokers rates. Do you have a experience with that? With
Yeah.
a client? Yeah.
Yeah,
Yeah.
same guy. He's like, well, I ain't giving that up. I was
Yeah.
like, good on you,
Yeah.
good on you.
Sure. You just got to be okay paying those smoker rates. It is what
Yep.
it is. So, well, hey, let's start with a question here. I get a lot of questions on that YouTube video that we put the link in before, but this one comes in from Captain Great, Captain GR8, Captain Great. Why isn't everyone doing this in the US? So, Paul, why isn't everybody doing this?
I don't know, Captain Great. Why aren't they? No.
Let me,
Yeah, I've had this question before with a client's wife when we were kind of in the early stages. And it was either, oh, I know, I have a friend that does this. No, you don't.
No, you don't.
No, you don't. Because if you did, and he was really your friend, you'd be doing it.
Right.
Why? Look at our experience, right? I didn't know this existed. This book came out when I was a junior in college
Yeah.
in 2000, right? I would have loved to have gotten my hands on it. And of course, I didn't know anything about finance back then anyway, right? So it's really just when you think about IBC practitioners, right, Dave? There's 600 or 700 IBC practitioners with the Nelson Nash Institute between the U.S. and Canada. In the United States, there's 340 million people, or what the heck it is now, right?
Yeah.
That's a very small amount of practitioners.
Very small amount.
Relative to the overall population. Same
Yeah.
thing in Canada. There's a few in Canada, and Canada's got 30 to 35 million people or something.
Right.
So
And
really, it's just, I would say you don't know about this. Not everyone's doing it because they want you to do something else. They want you 401k, IRA, whatever they can do to separate you from your money. That's what they want you to do, and that's why you're likely doing that. You average
Right.
American person.
Right. Another reason you don't hear about this, like Paul just said, there's about 600 IBC practitioners. There's several insurance companies, but guess what? Insurance companies don't promote IBC. They promote their products.
Right.
IBC is a process, not a product.
That's right.
So the only people teaching and promoting IBC are agents who understand IBC and make it their business, like their primary business, right? So now you have 600 agents who most of us don't do any marketing whatsoever.
This is our marketing.
This is our marketing podcast. I'm on LinkedIn, Facebook. Like that's our marketing. We don't have the budget that Edward Jones has to, to promote their
Yeah, that'd be
services.
nice.
Wouldn't that be nice? Like then everybody in the U.S. would know about this.
How are they
and-
paying for that marketing?
Yeah.
With your money.
I can tell you it's not with my money because I don't have any money with them.
That's right.
So there you go. But I think that's really what it comes down to. Like you said, one, they don't want you to know this, they being the financial industry. But two, no, nobody's promoting it because it's a process. It's a process, not a product. Now we have to use a product. You have to bank with something. And the best thing to bank with is dividend paying whole life insurance.
Yeah.
Hands
Just
down.
so happens to be dividend
Just so
paying
happens
whole
to
life
be.
insurance.
If there was something
Not by
better,
not by accident.
yeah. If there was something better to use, we'd use it. But
Yep,
I've never seen it.
There's not. There's not.
So there
Sorry,
you go.
IUL dudes.
Yeah. Well, they're not listening anyway.
That's right.
So
So
hope
yeah,
that
I
answered.
think that covered it though. I mean, it's caught, not taught.
Right.
This isn't something you're going to learn at your MBA at Stanford. It's not something you might learn EVA maybe or something. But it's just not super prolific because the other reason, Dave, is like most insurance companies, they don't have these huge, whole life insurance is a, I don't know, 4 to 6%
It's a
return
subset.
for the company.
Okay. Yeah. Right.
Over the life of a policy, let's say.
So it's just one thing they do.
It's one thing they do, and I will say this: before the advent of, kind of all Americans need to be in the stock market, this is where people put their money.
It's true.
It's only in our recent history, last few generations of Americans, that people have started to do, I'm working with a financial planner, I'm going to do this and that, I'm going to do mutual funds and dollar cost average and separate myself from my money as long as possible.
Right. Because that's the way to financial security.
Right. Somehow
so we've been taught. Yeah.
Yeah. Despite, the banks and truly wealthy people doing the complete opposite. Anyway, so I think that's why. I think we covered it.
Yeah. I think that's pretty good.
Now, people should-be's don't make honey, but people should be doing IBC. I'm a firm believer in that. If you're the right type of person, you ought to be doing IBC.
Absolutely. So listen to one of the first few episodes where we kind of outline who the ideal client is. Like, if this is you, IBC is for you. If this is, if this is not you, like here's some indications that this is not for you. So there you go. Well, good. Yeah. I hope that answers the question. That was pretty in depth. Well, today let's talk about red flags. So there with the advent of the interweb and all of the social media platforms out there. I mean, I had a guy contact me in, I don't know, a week or two ago and said he learned about IBC from TikTok. And then he ended up somehow stumbling upon my name while he was doing his searching. So I'm not
Money
on
Man
TikTok.
Dave.
Yeah, I did
Dave
have a
Money
channel,
Man?
something like that. I did have a channel for a little while, and I got so fed up with TikTok. This was like 2.5 years ago.
Yeah, it was a while ago.
I deleted it and haven't been back on. Plus, it's a Chinese company that's
Chinese
stealing all your
malware.
info. Yeah, exactly. So, but here's some red flags because there is so much, Captain Great says, why doesn't everybody do this? We said not enough people know about it, and this is why. But there's a lot of people learning about it right now, and there's a lot of information out there. Like if you want to learn about it, there's no shortage of information. The problem is figuring out what's legitimate information and what is sales tactics, what is
Marketing.
What is marketing, and how are they doing this in a way that Nelson never intended it to be done? So we put together, a big list here of some red flags that you all can look for when you're doing your self-education. So here's my favorite: leading with an illustration. So this is especially probably in the IUL world, universal life, where they cannot get an illustration in front of you fast enough. So I don't know how many times have you been contacted, Paul, when somebody's like, so I got this illustration, I'm going to send it to you. Yeah.
I don't play the illustration game. I tell them that right up front. Like, I don't even want to get involved with you if this is what it's going to be, and you've called 5 different agents. I don't like that. And we've said this before. I don't do that. I don't have the time to do that. We can make these illustrations dance, as James always says. I can make it look as great as it can be just to sell you a policy, but I'm not going to do that. That's not good business, and that's not how we educate our clients. You're going to go through an education process before you see an illustration.
Exactly. We don't want to shortchange you. So
that's right, which is important. Yeah.
Yep. Exactly. So, if that's the first thing somebody wants to do, maybe say thank you and just realize it's a red flag.
That's a red flag.
What's another one?
Anyone who uses the word investing in the same sentence as whole life insurance.
Yeah.
They don't know. They're either too lazy to use proper terminology, or they don't know, which is even worse. And let's face it, folks, the financial industry at large has a fairly low bar of entry.
This is true.
I'll leave it at that.
Yeah. Even lower than real estate agents, which is pretty low. Right.
Not no offense to the good ones out there.
Not to knock any real estate agents, but let's be honest, it's a low barrier of entry.
Yeah.
And that's just
I know some good ones.
Sure. Yeah, there are a few really good ones. So.
And I was a good one, even though I wasn't one. I sold my own house in El Paso.
Oh yeah, I did. I sold my own house in Kansas. So.
And I made the buyer pay all the commission to their agent. I paid none of it. Anyway, thank you very much.
All right. Here's another one. Hey, you can become rich buying cars. How many times have you seen that? Like, hey, buy cars and become rich doing it. No, you cannot become rich doing IBC to buy cars. You just can't.
No, these are the type of people that are reaching out to try to be guests in our podcasts.
Yeah.
You want to be hey, do you want to have us on as a guest? I'm like, I don't even know who the heck you are. Oh, yeah, right. Look. No, I don't.
Yeah. The fact is they don't understand it in the first place. And that is a 100% sales and marketing tactic. It gives us a bad rap. The rest of us.
And just to rehash, taking policy loans does not add value to your policy.
No.
Okay.
Plain and simple. Taking policy loans does not improve the performance of your policy.
Correct.
So using policy loans as opposed to bank financing or saving up and spending cash does benefit
better.
Your overall financial wealth building picture. Absolutely, hands down.
Yes.
Yeah.
But again, folks, red flags. And I've seen that one. I know exactly the one you're talking about.
Yeah. How about this one? This one just came to me from a prospect I was talking to this week. He said, hey, I was checking out this website and, this guy kind of teaches IBC, but he said it's archaic and he has a better way. So I got on the website, but I didn't spend the time researching what exactly this guy was talking about, but because he's not worth my time. But if somebody says IBC is archaic and here's how you should do it, major red flag. They're just trying to put a spin on something that's already as efficient as it can be for the long term and try to make it their own.
I don't know how IBC gets any simpler than ridiculously simple, as Nelson would put it, right?
Yeah.
It's ridiculously simple already. I could teach, my 8-year-old son a couple years ago asked if he could take a policy loan to buy a bike. I mean, he understood that he had value there and he could get to it. And it's ridiculously simple. So what this all is, it goes back to the marketing and the spin, and I have to separate myself somehow from the original message because why?
Because it's not sexy enough. What I told this guy, when I was talking to him, I was like, he's absolutely right. IBC is archaic because it's been around for hundreds of years. Like whole life insurance has been around for hundreds of years. It's absolutely archaic, but there's a reason it's been around for this long because it works. That's like hard stop. It works.
It works.
Yeah. So why would you, if it ain't broke, don't fix it. Now there's things, life insurance companies might change their products and add another feature here or there. It's just bells and whistles that might add another benefit to what we're already doing. But IBC is a process, not a product.
That's right. And as far as being archaic, like, what does that mean? Like, it's
it just
boring
means,
and old-fashioned.
It just means old-fashioned or old.
Like,
yeah, that's it.
Okay.
Yeah.
I've been reading a lot of old books lately, like from 1946.
Yeah.
There's The Richest Man in Babylon, which I think is 1926. That's the year my grandfather was born. Those books have phenomenal messages that are clearly written, clearly understood. Hey, this is no different.
Right. Like
it's very simple, and that's a good thing. Embrace it. Embrace the simplicity. So I think
what else is archaic? How about good manners and chivalry, but opening the door for people, a solid handshake? Like that's all archaic. But
People seem surprised when I hold the door for them now, just because up here in DC, everyone's rude and
oh yeah,
it's just
sometimes I don't. Sometimes I almost feel bad when I hold the door for somebody because then they start running. Like in Minnesota, I see that all the time. Like people start hustling to get to the
oh
door
no,
really
that's fun to
quick.
do though, because you're like, I wonder if they're gonna run,
Yeah,
and then you get them to do it.
yeah. I'm like, I didn't mean to make you run. I was happy to hold the door. You're only like 5 steps away. But
My
yeah,
dad has this friend who in traffic will, they'll be stopped. He'll creep forward just to see if he can get the car behind him to creep. And then he'll do it
yeah.
again. And he's like, yeah, I got to do it 25 times in that traffic that we're in.
So we were on our way to school. We're total tangent right now. On our way to school the other day, and this minivan in front of us at the stoplight, the dad jumps out of the driver's side, out of the driver's seat and runs around the minivan. And we call that, I don't know what they call it today, but it's the Chinese fire drill.
That's
Right?
what we used to call it.
Yeah.
Yeah.
But
Yeah.
he was running around saying, I'm doing a Chinese fire drill. And all of his kids were in the car embarrassed. But all the other cars at the stoplight were just cracking up. Everybody's
Yeah.
laughing. So
That's
yeah,
because it's funny.
it is funny.
Yeah.
It's fun. I'm going to do it to my kids when they're old enough to be
It's
embarrassed.
very archaic of him.
Very archaic.
Very 80s.
Some
maybe
things don't go.
90s.
Some things do not go out of style though, like manners, chivalry, Chinese fire drills, and whole life insurance.
That's right. Blue jeans,
Blue jeans, jean jackets,
Glock 19.
Canadian tuxedo. Yeah. All right. Next.
Anyway,
How about the big four? So there's a lot out there like, oh, you got to use one of the big four. Like,
why?
yeah, why? You tell me why.
Does it work the best? Do those companies offer the best product? Do they have the best product offerings that work well with the process of IBC necessarily? Maybe they do, maybe they don't. Do they allow first year policy loans?
Maybe, maybe not.
Maybe, maybe not. I don't know. Like, what is that? Okay. This is purely based on, basically assets under management. How big is this company?
Right.
I could care less about that.
No, what I care about is how long have they been around? How many years have they paid out a dividend? And frankly, how conservative is their operation?
How close does your original illustration on the non-guaranteed side look 3, 4, 5, 6 years into the policy?
Well,
Was that promised dividend close or was it way off?
yeah, that's good advice for anybody who's had a policy for any number of years. Get your agent to run an in-force illustration and compare it to the original one you signed in the contract. There you go. That's a good way to do it.
Sure.
But, size matters to an extent when it comes to this, but not like you don't want some little piddly company that hasn't, that doesn't have the resources necessary. I mean, frankly, those are some of the companies that go under, these little tiny insurance companies. And then they just get bought out by bigger companies when they become insolvent or, they get taken over by somebody else.
Yeah. Something that we can educate folks on is these companies are rated, whether you put stock in these third-party rating agencies that do these things, right? But they're given this overall Comdex score, and you certainly want something that's well up into the 90s, right? And of course, some of those bigger companies are right up there, but some of the smaller companies, one that we particularly really like, is right there with them.
Right.
So anyway, I think,
Yeah. So if somebody's saying you have to do one of these four
Yeah,
companies, then that's a red flag.
that's a red flag. That means, it's just not true.
Yeah. What's next?
This one bugs the crap out of me.
This one
'Cause I was
grinds my
always-
gears.
Yeah, I just because again, it's either marketing or it's a misunderstanding of what's written on a piece of paper inside of an illustration or inside of a contract. The guaranteed 4% interest. And I had to debunk it. I was a guest on a podcast last year. I think the episode came out this year. Where I was like, well, no, that's not really a thing. That's not what that means. And I had to kind of explain, that's a kind of a actuarial nerd math crap behind the scenes, right? That
Right.
or don't waste your time on, right?
Yeah.
But it doesn't mean your policy earns 4% guaranteed. If that were true, you put in $10,000 of cash, of premium in, your cash value would be that plus 4% at the end of the first year.
Yeah.
And it's not. It's
not.
way less.
Right. Exactly.
So that's not what it means. There's no such thing. That is a what they call a non-forfeiture rate or crediting rate or something. I forget the exact
it's basically
language.
the number they use to make sure the cash value equals the death benefit at age 120.
Right.
So, and then they reverse engineer the policy. So don't get wrapped up in that.
People, don't get wrapped up in it.
Yeah, and don't take it at face value.
It does not mean that your policy is credited 4% guarantee.
Exactly.
Like cash on cash or rate of return, internal rate of return. That's not what it means.
Right. There you go. All right. How about this one? When people don't reference IBC, but they promote it using a different name, like, all sorts of different names, and they do everything they can to make it sound like they discovered this concept, and they don't give credit to Nelson Nash and the infinite banking concept. So another red flag.
There's a lot of that out there, and there's some of the bigger named ones that have been around a while. Well, I'm not going to name them here, but we all, those of us who have friends listening know who we're talking about.
Yeah.
Probably.
But let's be clear. That doesn't mean that they aren't doing it correctly necessarily.
Right.
They could be doing it correctly and doing a good job of it, but they're not, I don't know, in my opinion, in our opinion, they're not giving credit where credit's due. So, they're taking credit for somebody else's discovery.
Yeah.
And writing it off as their own.
And I would say there's a few that I've seen that do reference Nelson fairly often. So I think that's good, and I think they should be, right? I think give credit where credit is due.
Yeah. There you go.
Yeah.
Here's the biggest one. The biggest one. Well, I can get a better rate of return with universal life.
Good luck.
Good luck. I mean, maybe not.
Guaranteed?
Yeah. Where's your guarantees, though? There you go.
Well, there aren't any.
Yeah. Guarantees. The only guarantees most of those policies can make that I've seen is that, hey, by age 65, you may have zero cash value and zero death benefit.
You're guaranteed to have to pay premium forever.
Ooh, there's a guarantee.
There's a guarantee.
Guarantee that, more or less a guarantee that premium's going to increase as you get older.
Right.
So
and we've fielded that question before. Why isn't IUL appropriate for IBC? And those are previous episodes you can look at in the notes and the title of it. But yeah, not an appropriate product for infinite banking.
Yeah, that's
largely because of the increasing premium and there's no guarantees.
Yeah, episode 33, by the way.
Perfect.
Or no. I'm sorry. That's for another one. That's for the 1090.
Oh,
yeah. Why don't you talk about the next one? I'll look up that episode for.
Sure. All right. The only way to design a policy for infinite banking is with 10% to the base or less, if the company allows it, and 90% to the PUA. Well, this goes back to like the illustration dance. Yeah, that's going to look, the 1090 will look good. The 10% of the base, 90 to the PA is going to look great from a cash value perspective. But if you do that design, you're purposely limiting the amount of premium you can get into a policy later on. Why would you want to which means you're restricting the amount of wealth building potential that you have. Why would you do that?
Right. Is it your
because
goal?
You want instant liquidity tomorrow. You've ignored think long range, don't be afraid to capitalize, rethink your thinking. You've ignored all these rules that Nelson has that we teach and that we abide by. Yep. You're ignoring all of those by just, I want all my liquidity next year.
Right.
Sorry.
Yeah.
I want to be able to pay the highest premium I can, have access to my cash value, but I want to pay that high premium as long as possible. Why would I not want to do anything? Why would I do different? I don't. I want to pay it as long as I can.
Contractually have the right to pay it. Yep.
And I'll make a choice 40 years from now. Well, to RPU, reduce paid up, or premium offset, or whatever. I'll make that decision then. I'm not going to do any of those things, by the way. I'm just saying I could.
Right. So a good question to ask is it your intention to reduce the amount of wealth you can build over your lifetime?
Yes, sign me up for less wealth.
Do you want less wealth? And okay, let's do that design.
Right.
There you go. If you want to learn more about the 1090 and why it's not a good fit for IBC, then episode 33. The IUL episode is episode 29. So there you
29. I knew they were all fairly recent.
Yeah. Yeah. So just scroll. Okay. Well, so we cover some red flags. How about some things to ask an advisor? So when you get in front of somebody who promotes IBC, who says they do IBC, here's where a lot of people start. They're like, well, I'm trying to find the right company. I say, no, what you're looking for is the right person. If you're
That's
working for the right person, they've already found the right company for you.
Yep.
So
that's perfect.
Yeah. So if you want to do IBC, if that is your goal, then the first question you need to ask is, are you an IBC practitioner, or have you been through that course?
What is that?
So what that is, that was a course developed by the Nelson Nash Institute with the help of Nelson Nash, Bob Murphy, Carlos Laura, David Stearns, the gentlemen who sit on the board for the Nelson Nash Institute. They developed a course to ensure that agents who want to practice and promote IBC using the IBC name understand exactly how Nelson intended it to be used.
Right.
So, and we pay money. We do a lot of training. We take a test. We get interviewed and accepted by them in the first place before we can even go through with the course, because It's not for everybody. They're not going to accept everybody just because you want to do it.
And they've kicked people out too.
Yeah, and if you don't uphold your end of the bargain, they will kick you out, as they should. And maybe they should kick more people out, but that's not my choice. So yeah, are you?
Dave
an
got
IBC?
the second highest grade on that test, by the way.
No big deal. I must have had an off day that day. So
yeah, even at 50%, he's still twice the normal man.
You said it, not me. But are you an IBC practitioner? And so there's some people who might have gone through the course and then they decide they're not going to keep up their practitioner license every year and not pay the fee or whatever it is. That's their choice. I prefer to stay a member, and so does Paul.
Yeah, I enjoy. We go down to the think tank every February or whatever, and I enjoy the people down there a lot.
Yeah,
immensely.
Right, just a great group of men and women.
Yeah.
So, but actually, mostly men, but we've started seeing every year there's like more women.
Yeah.
More female agents there, which is great. Because I think that's often an overlooked market, perhaps, is female business owners, or sometimes it's the wife in the relationship that takes the lead on finances.
Yep.
But our wheelhouse is typically like military men, conservative military men, family men with kids and all that, because that's kind of our network. But it's really good to see this message spreading to women too. And I love it. I've got a whole lot of female clients actually in the last year, which is great because they ask different questions.
Yes.
Fun. Yeah.
Yeah.
Yeah. So it's made
me a lot
smarter.
That balance. I think guys are, let's go.
Yeah.
And
I get it, man. No, I don't have any questions. I'm good. Let's go. I'm not going to stop and ask for directions. So, so that's a good question. If you want to find one in your area, you look up the Nelson Nash Institute or infinitebanking.org.
Practitioner finder.
So we're on there. We're licensed in many states. So, I mean, most of our clients are from out of state anyway. Right. So,
yes.
So, all right. What's another question?
You might want to ask this person how many dividend paying whole life policies structured for IBC do they personally own? And with that, what percentage of their overall income are they paying in premium? It ought to be somewhere upwards of 20 to 25% of their income is paid in premium. Should be. As a general rule, something like that.
Yeah. I mean, just like you're not going to go hire a fitness coach who's out of shape.
5'5", 500 pounds.
Exactly. You're not going to hire somebody who has all the knowledge but doesn't practice what they preach.
Right.
That's just the fact. So yeah, make sure you work with somebody who walks the talk and practices what they preach. So, and that's an open question. That's a fair question. If somebody's trying to sell you something that they say is good for everybody, but they don't do it themselves, then yeah, that's a major red flag right there.
Well, right.
So,
You have to, someone who's, walking the walk, talking the talk,
yeah.
and practicing what they preach. You can't put it any better than that.
Well, and as you've mentioned before, we're happy. I mean, you've opened up your policies online and shared it with people and like, hey, here's the policy, here's how it
All
works,
the
here's how
time.
I take loans. So, that's something I'll do once we're working together. We're in that process.
I feel like people who sell things that they don't use, like I'm a big automotive enthusiast, right? And I can talk fairly intelligently on what type of vehicles I would and would not buy.
Yeah.
Based on personal experience. It's the same thing with this. You can't be an effective IBC practitioner without owning the product and using it in your own life and believing in it, right? Like, who do you know that's paying, 20% of their income in whole life insurance premium? Nobody that's doing that.
Right. Because that's stupid. That's the dumbest place you can put your money.
It's the dumbest thing ever. Like,
it's a scam.
And that's what I like about that group of, just a few hundred of us. They all do that.
Yeah.
They're all doing
that.
that.
Oh, for sure. Yeah. Every one of them.
Every single one of them.
Most of them probably got into this business like you and I did because we already had these policies in place. And we're like, man, we got to spread the message.
Yes. People, and that's very common, right?
Yeah.
Clients becoming agents of their own because they believe it, they see it, they learn it, and now they want to spread it to their own. And that's great.
Yeah. If you don't, you just want to feed us leads from your network. I'm happy to take those too. So
yeah, we also take referrals. Yeah, no question.
Definitely. I love referrals. Those are the best kind of leads. So yeah. Well, cool. I think that's pretty good for red flags. Hopefully that covers the gamut. I'm sure there's more out there, but if something sounds too good to be true and they don't have any drawbacks whatsoever, might be a red flag.
Yeah, they pass you off into their assistant's assistant.
Yeah, I get asked so many times, people who set up calls from that YouTube video I have, they're like, oh, wow, I actually got you on the phone. I was expecting, because every time I call somebody else, I just get, some random person who they can't answer my questions.
I think that's important, Dave. And I tell new agents this all the time. I was like, one of the things that has made us effective is that you don't forget where you come from. Right. This is a very personal, very serious business, but you keep it personal. Like, I want to know their story. I want them to know my story, because that creates a good client relationship that you want to, foster and grow and make it long term. And
yep.
And that creates good business later down the road. Right.
Absolutely.
Repeat business oftentimes. So I open up policy on the wife. Now I'm going to open up policy on the kids. So yeah, I think that can help you stand out rather than you're talking to some intake person who, you're just a name and a phone number. You're not really anything else.
Yeah. Yeah. You're way more than that to us.
That's right.
The agents with hearts. We'll get some t-shirts made. All right, man. Hey, good talking to you. And we'll catch you all next time.
Yeah. I'll see you at the wedding.
All right. Yeah. We'll see you, bud.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.